Ever stared at a squiggly line on a screen and wondered, what on earth does that even mean? If you've ever opened the Raiz app and been met with its investment graph, you've probably asked yourself that very question. It's not just a random line, it's a story of your investment journey. But deciphering that story? That's where things can get a little tricky. We all know investing is about growing your money, but without understanding the tools that show you how you're doing, it's like trying to navigate a city without a map. Today, we're going to change that. We're going to demystify the Raiz graph, turning those squiggles into clear, actionable insights. Before we dive into the graph itself, let's quickly recap what Raiz is all about. It's a micro-investing platform that rounds up your everyday purchases and invests the spare change. It's designed to be simple and accessible, making investing easy for everyone. But even simple platforms have their complexities, and the graph is a prime example. The Raiz graph is essentially a visual representation of your portfolio's performance over time. It shows how your investment balance has fluctuated, giving you a snapshot of your gains and losses. But to truly understand it, we need to break it down. First, let's talk about the vertical axis, the y-axis. This axis represents the dollar value of your investments. It shows the total amount of money you have invested in Raiz at any given point. The higher the line goes, the more your investment is worth. Conversely, the lower the line drops, the less your investment is worth. Now, let's move to the horizontal axis, the x-axis. This axis represents time. You can typically adjust the time frame displayed on the graph from 1 day to several years. This allows you to see both short-term fluctuations and long-term trends in your investment performance. The line itself is the key element. It connects the data points, showing the progression of your portfolio's value over time. A rising line indicates that your investments are generally increasing in value, while a falling line suggests a decline. But it's not just about the direction of the line. The steepness of the line also matters. A steep upward slope indicates rapid growth, while a gentle upward slope suggests steady but slower growth. Similarly, a steep downward slope indicates a sharp decline, and a gentle downward slope suggests a gradual decrease. You might also notice some other indicators on the graph, such as specific dates or points where significant changes occurred. These can correspond to market events, changes in your investment strategy, or simply the natural fluctuations of the market. Understanding these elements allows you to interpret the story the graph is telling. For example, if you see a sharp drop followed by a gradual recovery, it might indicate a market correction. By recognizing these patterns, you can gain a better understanding of how your investments are performing and make informed decisions about your financial future. Remember, investing involves risk, and fluctuations are a normal part of the process. The Raiz graph is not a crystal ball, but it is a valuable tool for tracking your progress and understanding the overall trend of your investments. Don't get too caught up in the day-to-day volatility. Focus on the long-term trend. Are you generally seeing an upward trajectory? If so, you're likely on the right track. If you're consistently seeing a downward trend over a long period, it might be time to reevaluate your investment strategy. Utilizing the graph to its full potential means regularly checking it, understanding the context behind the movements, and aligning that information with your overall financial goals. It's not just about seeing numbers, it's about understanding the narrative those numbers are telling. With that said, thanks for watching, and until next time.